Hi everyone, welcome to a brand new episode. I'm Marcus and today we're looking at Pfizer, ticker symbol PFE. We'll cover the income statement, balance sheet, cash flow, key figures, our key feature, and the technical aspect of the stock. Should we be buying Pfizer? Well, let's take a look. As I mentioned, we're looking at Pfizer, ticker symbol PFE, and they're traded on New York Stock Exchange and are in the life and science sector. If we go down to the screen, we can see that their market capitalization coming in at $247 billion and the revenues is at $101 billion. PE ratio coming in at 8.5. That is just amazing. That is a goal. And profit margin at 28%. I like it, so that is a plus. So price to sales ratio and price to book value is within my range. We are talking fair value here, and they pay a dividend of $1.58. That is a plus. I like those recurrent income. Effective return at 3.6%. That is a plus, and also I believe that we'll see better buying opportunities as time goes on with everything that is going on with the economy right now. So I believe we'll get better buying positions. Return on equity coming in at 37%. That is just amazing. Basically, return on equity tells you about a company's ability to create return on their equity, and having a positive, such as positive return on equity numbers, that is a plus. I like it. And return on asset coming in at 13%. That is a plus. So the stock is currently traded at $43 per share. If we go down to the moving average, we can see that we are below the 50 and the 200-day moving average. Basically, what this is telling us is that it indicates that we might see the stock price decline. If we take a quick glance on the chart, we can see that we have been moving within a negative trend channel for quite some time, but we'll take a closer look at the technical aspect of the stock. But now let's head over to the income statement. What we can see here is that the total revenue went from $50.8 billion and grew to $80 billion, and we can see we improved, fell off a bit in 2 years straight, and then recovered, so that is a plus. Gross profit went from $23.9 billion up to 34.6. We can see here we fell off for 3 years straight and then improved a bit, so that is a plus. But at the same time, 1 year recovery is not enough. We need to keep an eye on the business and see what kind of data is being produced, because maybe this is not a indication of a reversal, of a trend reversal. This might be just a change in the road before it continues the downward spiral. But seeing that they recovered the last year, that is a plus. And also the fact that these numbers is greater than what we started off with, so that is a plus. Net income went from $21.3 billion up to $22 billion. We can see here we fell off a couple of years and then improved. Same thing here. We need to be very cautious here because it might not be a reversal here. We might be moving in a negative channel, seeing lower and lower net incomes, but seeing that the numbers greater than what we started off with, that is positive, so that is a plus. Now let's head over to the balance sheet. What we are interested here is that the current assets versus the current liabilities, and we can see there's a huge difference between the current assets and the current liabilities. Basically, if they were to convert it to cash, they are able to pay off their current liabilities, and that is a plus. But they are far from being able to pay off their total liabilities, which is negative. And we can see here one key thing to see, that we start off with $100 billion, then they reduced it, then they grew it, then they reduced it. But so we are seeing that the debt is growing, but it's fluctuating, it's moving within a range. So I like that, the fact that they try to reduce the debt overall, so that is a good behavior. But overall the debt is growing, and also we need to really try to find why is the debt growing, what are they trying to achieve. But seeing that the debt is growing, that is negative. The outstanding shares went from 6 billion shares up down to 5.6 billion shares, and we can see here they have been doing buybacks. They issued more shares over here, but in overall over the years they have been promoting for the investor. Basically, the investors' share of the company is growing because there are fewer and fewer available shares out there. So that is amazing. So that is that is a plus. I'm sorry here. That is a plus. Now let's head over to the cash flow. What we're interested here is that the operating cash flow versus the capital expenditure. We can see the operating cash flow came in at $32.6 billion and the capital expenditure at $2.7 billion, making a difference of what, $29 billion. That is amazing. And we can see how these numbers went from 16.8 billion up to 32. We can see here we fell off a bit, but have recovered over the year, so that is a plus. But as I mentioned before, a lot of uncertainty here. We are seeing these numbers dropping, but they recovered the last year, so we need more data, long-term data, in order to see if there is a change in a trend. Capital expenditure went from 2.2 up to 2.7. We can see that they continue to invest in their business, so that is a plus. Now let's head over to the key figures. What we are seeing here is that earnings per share went from $3.5 per share up to 3.9. We fell off here and then started improving, fell off a bit. Fluctuation, I don't like fluctuation, because fluctuation is the same thing as uncertainty, and uncertainty is not good for investors, because we want easy and predictable businesses that we understand and that we can see ahead of time where the business is going. See, uncertainty, that is not good at all. But seeing that these numbers is improving, that is a plus. Revenue per share went from $8.5 per share up to $14 per share. And we can see that we have been improving, fell off a bit in 2020, but overall trend is positive. Equity per share went from $11.9 per share up to $13.7. We can see we fell off here, improved again, fell off a bit and improved again, but overall trend is positive. Dividend per share went from $1.28 up to $1.56, and these numbers have been improving year by year. That is a plus. I like it because I like those income. Also, I like the recurring income, so that is a plus. The dividend share we see here 35, 71, 15, 92, 39. Overall, I like what I'm seeing here. I like companies that pays out less than 60%, because I want some of the capital to remain in the business for investments, for acquisitions, or just having the capital to strengthen their financials. So seeing that they should be holding that line below 60%, but overall they've been doing below that, so that is a plus. Gross margin went from 47% down to 43%. We can see here we have been ranging between 43 to 47 basically. As I mentioned before, not a lot stability here, a bit of fluctuation here, but overall trend we can see that the gross cost of goods sold is fluctuating. But I would like to see them put a lot of effort in stabilizing and reducing the cost of goods sold, become more efficient, and seeing these numbers improve year by year and not just stagnating, moving, ranging. Operating margin went from 24% up to 29.7%. We can see here fell off, improved again, fell off, improved again. Overall trend is positive, so that is a plus. Profit margin went from 41.9% down to 27.4. We can see we dropped a lot, improved again, and then fell off again, and then improved again. But overall trend is negative. They need to find ways to become more efficient, stabilize the business, reduce their cost of goods sold, reduce their operating costs in order to improve the profits. Return on equity went from 29.8% up to down to 28.4%. We fell off here, improved, fell off, and improved again. But overall trend is negative. Return on assets coming in at 12%, and then down to 12.1. And we can see here, same thing here. We are fluctuating, but overall trend here is negative. Solidity went from 4.4% up to 4.5, 42.5, and these numbers have been dropping, improved, and improved again. So these numbers are plus. Basically, solidity tells you about a company's financial strength for the long term. And we can see here balance sheet liquidity, same thing as solidity, but it looks at the company's financial strength for the short term. We can see it went from 0.6 up to 0.9, and these numbers have been improving, fell off again, and then have been improving over the years, so that is a plus. Debt ratio went from 1.4 down to 1.3. We can see here these numbers grew a couple of years but have been since dropping. That is a plus. Basically, in 2021, with a debt ratio of 1.35, that means that the company had 1.35 times more debt than equity in the business. So that seeing these numbers are dropping, that is a plus. Basically, a quick conclusion is the company needs to find ways to reduce their cost, improve the financials, and find more stability, because there's a lot of fluctuation, a lot of uncertainty. I'm not liking it at all, but overall the business numbers are great. But at the same time, we need to compare these numbers across the industry and see, is this a normal behavior across the industry, or is it something unique with Pfizer? Now guys, we have gone through the income statement, balance sheet, cash flow, key figures. Now over to the key features, which is the stock analyzer. And what it does is that it gives you a simplified, holistic overview of the company's performance. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. If we just take a quick glance, we can see that the P/E ratio is below 20. That is a plus. The company pays out dividend, plus. Dividend payout share below 60%, plus. And the dividend have increased over the past 5 years. That is a plus. And number of outstanding shares have dropped over the past 5 years. That is a plus. Revenue increased over the past 5 years, plus. Profit margin above 15%, plus. And profit increased over the past 5 years. That is a plus. And the current assets are greater than current liabilities. That is a plus. Solidity improved, plus. And balance sheet liquidity have improved. That is a plus. And debt equity ratio have improved. That is a plus. But the total liabilities have grown over the past 5 years, and that is negative. But they have, as we saw, been reducing the total liabilities and then increasing. But overall trend is negative, even though they are fluctuating slowly upwards. Guys, as you can tell, it gives you a simplified, holistic overview of the company's performance, and it saves you a lot of time. If you still want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. And you can have the software along with everything we've gone through, plus access to a discussion forum where you'll be able to chat with me along with other members for only $10 per month. So make sure to head over to comments.se and become a member today and support the channel. Okay, thank you. But now let's take a technical look at the stock. So guys, now we have the chart. As we can see here, we have been moving within a positive trend line for quite some time. Let me put up a trend line, something like that, and we can see that we are moving within a trend line, and we can see that we have some key areas right here. So and with everything that is going on right now with the economy and central banks all over the world increasing interest rates, and we saw recently attack of the Gulf Stream pipeline, that will push commodity prices even higher. So there is a lot of risk to with the inflation going even stronger. So we have seen European Central Bank, Bank of England, and the Fed all increasing interest rate. Basically, they're trying to dampen the demand in the economy and also the economic activities. So for the short and mid-term, we will see the stock price fall, because we have seen recently that it really impacts the financial markets the fastest. Even though we have seen some tendencies in the housing market, we know for sure financial markets are getting hit, especially those companies that doesn't pay out any dividends. Basically, growth stocks are really in the red lines. Well, dividend stock and stable dividend stock have become a safety where people, investors have their hideouts basically. So, and also with this strong dollar that is breaking record after record, is making it easy for a lot of Americans because of import, but also that means they are exporting inflation to other countries, and especially also the companies that all have the debt in dollars are really hurting. So I believe for the short and mid-term that we will see the stock price decline. So, but now we are around $44 per share. And basically, we are near the support line over here. And there might be a lot of investors that be looking at the behaviors so far and seeing the drop here, the recent drop, that we might be moving in a negative trend line, negative channel here, and be thinking, okay, we might see the stock price. Let me remove the lines. So a lot of people may be thinking, okay, let me watch this stock as it goes below this line here. It may reach a support line. A lot of conflicts, a lot of buyers and sellers will enter here, and we might see stagnation for quite some time, or a consolidation, I mean, for quite some time. But I believe going forward, we might see the price bounce back up towards the resistance line. But for the long term, it's short and mid term, I believe the stock will continue to decrease. But this is a great company, even though there is a lot of uncertainty here. But still, it's a great company, great numbers, and I believe for the long term, I'll be looking into adding shares to my portfolio. But for now, I'll be waiting, and you can dollar cost average. That is a way to do it. But I'll hold on for a minute and wait for the stock to continue to drop, the stock price to continue to drop. But I'll be then adding to my portfolio, because I believe for the long term holding this stock for 5 years to 10 years, we will see both the dividend growth, but also get capital gains on those stock. So guys, that's all I have for Pfizer today. I hope you have enjoyed this episode and it was of value to you. If you have any questions or stocks you want me to take a look at, just let me know in the comment sections below. And if you've enjoyed this episode and want to support the channel, and guys, we are not far from reaching 300 subscribers. So if you haven't subscribed yet and you like the content, please give me a thumbs up, comment, and subscribe. Okay, and don't miss a new analysis will come out on Friday, and also we'll do a market watch, weekly market watch on the weekend. So don't miss that. So make sure that you subscribe and have the bell on so you don't miss any episode. But as always, I truly hope you enjoyed this episode, and until next time guys, take care, and I'll see you then. Bye bye.